SPACs. What are they? Why did they become so popular? And what happened to all that interest? In this video, we're gonna find out. Hello, I'm Brian McGovern, Senior Editor with the Investing News Network, and today we're gonna be taking a closer look at the rise and fall of SPACs in the eyes of the capital markets. Special Purpose Acquisition Companies, or SPACs, are an investment method in which a shell company is formed with the expectation to raise capital and pursue merging with a private firm to kickstart the official company business. The acquisition in question is commonly referred to as the qualifying transaction. Nawan Butt, portfolio manager with Purpose Investments, told me that he saw the rise of SPACs coming from investors demanding more ways to access the capital markets.
The reason why we saw SPACs really take off in the past few years is because there was a lack of the opportunity set for investment became narrower as investment opportunities got more expensive.
Thanks to these SPACs, as Bud explained, the capital markets were able to see private valuations out there in the public eye.
Why a lot of people, we also think we're investing in SPACs is because a SPAC was almost a fixed income line item with equity-like upside optionality.
Even though they've been around for a long time, in 2019, SPACs really took off. They even hit really major industries such as tech and life sciences. 2020 was another banner year for SPACs, but by 2021, you could start to see the cracks in the interest. Despite the cracks, the top 5 companies of 2021 for SPACs still were able to get billion-dollar valuations. Here are the top 5 listings for 2021 when it comes to SPACs. Tech company SoFi on the Nasdaq got an $8.65 billion valuation, while Clover Health, also on the Nasdaq, got a $7 billion valuation. BARK on the New York Stock Exchange for its part obtained a $1.6 billion valuation, with Hims & Hers Health also coming in at $1.6 billion, also on the New York Stock Exchange. Last is Build Trust within the Nasdaq with a valuation of $1.3 billion. Among the many industries that SPACs reached into, cannabis was also one of them. Although the relationship between SPACs and the cannabis industry has produced 2 of the biggest multi-state operators in the US marketplace, Bud told us that the relationship hasn't been all it could have been, and he doesn't see that changing anytime soon. The financial expert told us that there hasn't been a major dynamic between SPACs and cannabis from his perspective. In fact, he's only seen a couple that have been really successful. The 3 that he pointed out to us were Columbia Care, a multi-state operator listed on the NEO and the CSE, Air Wellness, another MSO on the CSE, and WM Technology, the parent company of Wheatmaps, which is listed on the Nasdaq. According to the financial expert, the major issue that has divided SPACs and cannabis has been the aggressive lockups that you find in the SPAC model compared to an initial public offering or a reverse takeover, both of which are very popular in the cannabis industry.
Those aggressive lockups have really meant that some of these companies did not have enough volume, did not have enough shares trading, that new entrants into the space couldn't get the sort of float that they needed to really build positions.
And how are things currently standing for SPACs at large? Well, at the end of 2021, there was a real change in the interest level for these companies. At the end of last year, Reuters reported that some of the biggest brand name SPACs of 2021, such as BuzzFeed and Grab Holdings, actually suffered major losses upon hitting the public markets. So far in 2022, it hasn't been a different story. SPAC companies continue to face difficulties, and even one expert has recently called the SPAC bubble bursting. In an interview with CNBC in February of this year, Chris Seniak, Senior Equity Research Analyst at Wolfe Research, added, SPAC shares are extremely volatile due to their speculative nature. In that same story, it was also noted that over 20 companies with SPACs models have already pulled back on their listing intentions, despite filing S-1 forms with the SEC. Earlier this year, Bloomberg also reported that $8.7 billion had already been spent on SPAC opportunities in the second half of 2021, which did not end up materializing at all. To find out more about SPACs and their current place in the eyes of investors, check out the link below and read our full story. And that'll do it for us on SPACs today. Thank you so much for watching. We hope you liked this video. Don't forget to like and subscribe to our YouTube channel for even more expert interviews and our weekly recap. For the Investing News Network, I'm Brian McGovern, and we'll see you next time.